Now we'll be starting with the second chapter. It is very important chapter from examination point of view. That is classification and types of custom duty. For the purpose of classification of goods, what we have made the Custom Tariff Act 1975. And as we already discussed, this tariff contains two schedules. The first schedule, it contains the goods which are chargeable with the import duties of customs. Hence, it is known as import tariff. It is containing 21 sections and 98 chapters, in which the goods are listed which are chargeable with the import duties of customs. Then, certain goods are also chargeable with the export duties. They are provided in the second schedule, that is known as export tariff. That is export tariff. Now in this particular chapter, we will be discussing the various types of custom duties which are to be levied. So those duties which have been specified in the first schedule and second schedule, that is basic custom duty. That is what basic custom duty. Now we have section 3 of the tariff, that is dealing with the additional duties of customs. Then important is section 6. Section 6 is dealing with protective duty. Then section 8B, it is dealing with safeguard duty. Section 9, that is countervailing duty on subsidized article. 9A, that is anti-dumping duty. These are some important sections which you have to remember from examination point of view. So what type of duties are levied and what is the rate of duty that is determined by the tariff. Now let us see. As I already told you, our Custom Tariff Act 1975 is there. Basically, tariff is for the purpose of classification of the goods, and rate of duty. Now this tariff contains two schedules. First schedule, it enlists the goods which are liable to import duty of customs. Hence it is known as import tariff. Hence it is known as import tariff. Then we are having the second schedule. Second schedule enlists the goods which are chargeable to export duties of customs. That is export tariff. Now in import tariff we say there are what? 21 sections are there and 98 chapters are there. In each section we are having section notes, and for each chapter we are having chapter notes. And these section notes and chapter notes, they have legal backing. These section notes and chapter notes, they have what? Legal backing. Now let us see what are the 5 column headings of a particular chapter. So in a chapter we are having chapter notes, then there are 5 columns, 1, 2, 3, 4 and 5. The first column is of tariff item. The second column basically is description of goods. This is description of goods. This is description of goods. Then we have unit of measurement. Then we have standard rate, and then we have preferential rate. So in case if any producer or manufacturers of the preferential area and the goods are imported from that area and the owner claim at the time of importation, then preferential rate of revenue duty is levied. Now here it is basically 8-digit product classification system. Say 39, 10, 0000. So these 4 digits are known as heading. 6 digits are known as a subheading. And 8 digits are known as a tariff item. When we have 8 digit of harmonized system of nomenclature, in front of that we will be able to find out the rate of duty. In front of that we will be able to find out the rate of duty. Now basically our tariff, custom tariff is patterned on, customs tariff is patterned on harmonized system of nomenclature. This is harmonized commodity description and coding system. It is harmonized commodity description and coding system. This is harmonized system of nomenclature. Basically, it is an internationally accepted product classification system. It is internationally accepted product classification system developed by the Customs Cooperation Council, Brussels. Our tariff has been patterned on harmonized system of nomenclature, and this harmonized system of nomenclature contains explanatory notes. These contains a explanatory notes, and we can take the help of what? These explanatory notes while determining the product classification. Besides this, we are having rules for interpretation of tariff. We are having rules for interpretation of tariff. Basically, it is 6 set of rules are there. 6 set of rules are there. 6 set of rules for interpretation of tariff. Now, rule 1 is what? Relating to what? The titles and sections. Say basically, the titles of sections and chapters. The titles of sections and chapters, they are provided for ease of reference only. The titles of sections and chapters, they are provided for ease of reference only. For legal purposes, the classification is to be done in accordance with the terms of headings and subheadings and related section notes and chapter notes. So here, first rule is chapter 39 say it is. It is of plastic. This is the title and articles thereof. So fundamentally, the titles of sections and chapters are provided for reference purposes only. If you want to determine the classification is to be determined in terms of headings, subheadings, and related section notes and chapter notes. And unless the headings or notes do not otherwise require, in accordance with the following rules. Then that is fundamentally the section and chapter titles have no legal validity. Classification is to be done as per the terms of headings and subheadings and related section notes, chapter notes. So fundamentally that is to be kept in mind. Then rule 2A, that is dealing with what? Classification of say incomplete or unfinished articles. So in case if any article is incomplete or unfinished, if any article is say incomplete or unfinished, then but it has say essential characteristics of complete or finished article. It has essential characteristics of complete or finished article, then it will be classified as complete or finished article. Say if railway wagons are manufactured, say railway wagons are say imported or say manufactured. If any railway wagons are imported, wagon is there but seats are not fitted. Seats are not fitted, but it has essential characteristics of a railway wagon, then in that particular circumstance, classification will be done accordingly. So in case if any article is incomplete or unfinished, then but it has say essential characteristics of complete or finished article, then it will be classified as say complete or finished article. Similarly, in case if any article is removed in a completely knocked down condition or say semi knocked down condition, that is an unassembled or say disassembled form. If an article is removed in an unassembled or disassembled form, if any article the same is removed in say unassembled or disassembled form, the classification will be done accordingly. The classification here, the same will be done accordingly. So it will be classified as say complete or finished article. It will be classified as say complete or say finished article. Even if it is not as parts but as say complete or finished article. Then rule 2b, it is dealing with what? Classification of say mixtures or combinations. So here if in say if in a heading there is a reference to a material or substance, say in a heading reference is there of say rubber. Now this reference will include not only what? It will include mixture of natural rubber plus synthetic rubber. Now here reference to a material or substance, reference to material or substance will be taken to include what? Reference to mixtures or combinations. Reference to say mixtures or combinations of that material or substance with other material or substance. So fundamentally classification of mixtures and combinations fundamentally states what? Reference to a material or substance to include what? Reference to mixtures or combinations of that material or substance with say other material or substance. And similarly in heading, if references of a goods is given, that will include not only goods made out of that material, but it will include say goods made out of the mixture of that material also. But in case if goods fall under more than one heading, goods is made of more than one material or substance, more than say one material or substance. In that particular case, the classification will be done as per rule 3. As per rule 3. So classification of goods consisting of more than one material or substance, then which are falling under two or more headings, as per rule 3a, specific tariff entry will prevail over the general tariff entry. So here if we are having a heading which is referring say tableware, kitchenware and other household articles of iron and steel, and other heading is what? Table, say spoons, forks, ladles, cake servers, fish knives, etc. So fundamentally if we want to classify the forks, specific tariff entry consisting of say forks, ladles, cake servers, fish knives, etc., that will be kept in mind. First is specific will prevail over the general. Then 3b is what? 3b is classification of goods. Classification of goods consisting of more than one material or component. Classification of goods consisting of more than one material component. The same will be what? Classified in accordance with the material or component which gives them the essential characteristics. Classification of goods consisting of more than one material or substance, the same will be classified say basically which gives them the say essential characteristics. Then that is the essential characteristics criteria is there. So mixtures, composite goods consisting of different materials or substance, or say goods which have been put in a set for retail sale, which cannot be classified as per the above. They will be classified as if they consist of material or component which gives them the essential characteristics. Besides this, if when both the headings are equally specific, then rule 3c is there, letter the better maxim, the heading which occurs last in numerical order will prevail over the earlier one. So when the two or more headings are equally specific, then the heading which occurs last in numerical order which equally merit consideration. Then rule 4 is akin rule, that in case if we are not having any specific tariff entry for particular goods, then the classification will be in accordance with the heading to which the goods are more akin. The classification will be in accordance with the heading to which the goods are more akin. Akin means similar. Then rule 5, it is dealing with the classification of packing materials. Rule 5, it is dealing with the classification of packing materials. So fundamentally classification of cases or containers used for packing of the goods. So here they will be classified with the goods which they are meant. Say for example, we have to classify the camera case, musical instrument case, gun case, drawing instrument case, and similar containers, similar cases and containers, specially shaped to fit or fitted to contain a specific article or set of article suitable for say long-term or repetitive use. They will be classified with the kind they are normally sold with. Similarly, if packing materials or packing containers are there, they shall be classified with the goods of a kind normally used for packing of such goods. However, if essential characteristics of goods are derived from the packing material, then this rule will not be applicable. Besides this, packing materials or packing containers which are for repetitive use, packing materials or packing containers which are for repetitive use, for those also this rule will not be say applicable. So fundamentally, if any cases are made for particular type of goods, will be classified along with that goods, such as musical instrument case, drawing instrument case, etc. Then rule 6 is what? First of all, we will be determining the heading, and then we will be determining the subheading. Then say subheadings at the same level are comparable for determining the product classification. Subheading at the same level are comparable for determining the product classification. Besides this, we are having, general explanatory notes are there. Basically, it is dealing with what? Number 1 is say single dash, double dash, triple dash, and 4 dash. So basically, what do you mean by single dash? Where the description of an article, where the description of an article or group of article is preceded by single dash, then that article or group of articles shall be taken as subclassification of the immediately preceding description, that is a heading. Then if double dash is there, that when the description or group of an article or group of article is preceded by double dash, then the said article or group of articles shall be taken to be subclassification of the article or group of article which is say single dash. Similarly, we have triple dash and 4 dash. So basically, the said article or group of article shall be taken to be subclassification of the article or group of article which is say single dash and say double dash respectively. So fundamentally that is there. Beside this, what do you mean if 10% duty is there? What this percentage means? Duty is levied on basis of value. Duty is levied on basis of value. And that value can be value under section 14(1) or it can be tariff value under section 14(2). Besides this, if preferential rate of revenue duty is not specified, then standard rate will be applicable. And one is standard unit of quantity. This has been given in column 3 of tariff schedule. Basically, it is a unit of quantity like kg, length, meter, number, etc. This is a standard unit of quantity, and it is used to facilitate the collection, comparison, and analysis of trade and statistics. It is used to what? To facilitate the collection, comparison, analysis of say trade and statistics. So these are the rules for interpretation of tariff. As I already told you, system of dashes. Say when there is a single dash, the article or group of article covered by single dash, basically it will be taken to be the subclassification of article or group of article of heading. Then double dash, that is it will be taken to be subclassification or of the article or group of article which is say single dash. Then we have triple dash and quadruple dash. That is what? The said article or group of articles shall be taken as subclassification of the immediately preceding description which is say double dash, say or triple dash, single dash or say double dash. Then what are the types of duties we are having? Basic custom duty, auxiliary custom duty is in form of say surcharges. We are having additional duty of customs under section 3. We are having protective duty under section 6, safeguard measures under 8B, countervailing duty on subsidized article under 9, anti-dumping duty under 9A, and social welfare surcharges. They are levied. And say agriculture and infrastructure development cess is also levied on certain commodities. Agriculture and infrastructure development cess is levied. Now section 3 is basically additional duty of customs. First of all, additional duty of customs equal to excise duty is levied. Additional duty of customs is equal to excise duty is levied, say on petroleum products, or say we are having alcoholic liquor for human consumption. These are only now subject to excise duty. So when the goods are imported into India, they will be subjected to additional duty of customs under section 3(1), which is equal to what? The excise duty for the time being leviable on like article produced or manufactured in India. Now few commodities are only subject to excise duty. So in case if any goods are subject to excise duty on production or manufacture, when they are imported into India, they are subject to additional duty of customs under section 3(1). Beside this, we are having additional duty of customs under section 3(5). We are having say additional duty of customs under section 3(5). So fundamentally, in case if any article is say sold or purchased in India on which VAT is levied, when the article is say imported into India, additional duty of customs equal to VAT is levied at rate of say 4%. Now how you will be calculating the same? First of all, say assessable value will be determined. Say 10 lakh is the assessable value. So 10 lakh is the assessable value. First of all, this will be determined. Say 10 lakh becomes the assessable value here. Then basic custom duty is levied at rate of 10%. 1 lakh it is levied. Then this will be the value for the purpose of levy of additional duty of customs under section 3(1). Additional duty of customs is levied at rate of say, we take it, the same is levied at rate of 12.5%. Excise duty in India is levied on such commodity at rate of 12.5%. So on this 11 lakh rupees, 12.5% will be levied. That is 1,37,500. Now social welfare surcharge will be levied at rate of 10% of the basic custom duty and ADC. That is now it will be about 237,500 to 23750. So SWS is levied at rate of 10% of this 137,500 as well as say 1 lakh. So now this is sum total, that is how much? 11 lakhs into 12.5%, 137,500 plus 23750. That gives you 12 lakh 61,250, on which additional duty of customs is levied at rate of say 4%. On this, additional duty of customs is levied equivalent to VAT at rate of 4%, that is 50,450. Now this gives you the total cost of imported goods 13,11,700 and total custom duty is 3,11,700. So this way, earlier the duties were levied. Now most of the commodities are out of this. Most of the commodities are not subject to excise and VAT. Therefore, we are having section 3(7), that is very important. Section 3(7) is integrated tax. This is very, very, very important. 3(7). So here, in case if any article which is imported into India if any article is imported into India, so basically in GST we have seen imports are what? Deemed interstate supply. Import are deemed interstate supply. Imports are deemed interstate supply. So any article which is imported into India shall in addition be liable to integrated tax. It will be say liable to say integrated tax at such rate not exceeding 40%, as is leviable under section 5 of the IGST Act when such article is say supplied in India on the value which will be determined under section 3(8). Similarly, if any article is in India is subject to GST compensation cess, the supply in India is subject to GST compensation cess. Therefore, when the article is imported into India, it will be imports are deemed to be interstate supply. It will be liable to GST compensation cess at such rate as is leviable under section 8 of the GST compensation cess to the states compensation to the State Cess Act 2017 on like article on its supply in India on the value of the imported article as determined in section 310. So how you will be calculating the integrated tax? How you will be calculating the integrated tax and GST compensation cess? Let us see. 3(8) and 3(10). 3(8) and 3(10). First of all, we will be determining the assessable value under section 14(1) and tariff value under section 14(2). Assessable value is determined under 14(1) and tariff value is determined under 14(2). On that, what will be added? On that, basic custom duty is added. On that, basic custom duty is added, that is, or say any other sum chargeable on the imported article under any law for the time being in force, as in addition to the basic custom duty. Now here, say assessable value is 10 lakh and basic custom duty is 10%. So here 10% of 10 lakh, that will be 1 lakh will be added. Then next is social welfare surcharge. Social welfare surcharge is added at rate of say 10% of the basic custom duty. Social welfare surcharge. Remember that no social welfare surcharge SWS is not levied on safeguard duty. It is not levied on anti-dumping duty. It is not levied on anti-subsidy duty. And same is also not levied on integrated tax, and it is not levied on GST cess. So on this, now it works out to be 11,10,000 rupees. On this, you know, integrated tax will be levied. Say in India, GST is levied at rate of 18%. So here, on 11,10,000 rupees, 18% will be levied. On 11,10,000 rupees, 18% will be levied. Then GST cess is say levied at rate of 15% in India. So on this 11,10,000 rupees, cess will be levied at rate of 15%. Now this is the total cost of imported goods and is the total custom duty and integrated tax payable. Likewise, calculation is there. First of all, you will be determining the assessable value. Then you will be adding the basic custom duty. Then you will be adding the social welfare surcharge, and then that will be the sum total of the same on which integrated tax and GST cess will be say levied. Now we have seen that in GST also we have seen in schedule 3 that in case if we have imported the goods and kept the goods in a custom warehouse and the title of the goods is transferred in warehouse, then it is not regarded as supply. But the person who will be clearing the goods will be required to pay the integrated tax. On what value the goods, on what value integrated tax will be levied? That is the value determined under section 8 or the transaction value of the goods, which I say higher. So if the goods have been imported for 10 lakh rupees, this was the value under section 14. Value under section 14. Basic custom duty is 10%. Say it is 1 lakh rupees. And we know that social welfare surcharge is at rate of say 10% of the basic custom duty, 10,000. So value under section 3(8) is what? 11,10,000. Now the goods have been deposited in the warehouse, and in warehouse the title has been transferred for 14 lakh rupees. Now here the integrated tax will be levied on 11, 10 or 14 which is higher. So integrated tax in India is 18%. So integrated tax will be levied at rate of what? 18% of 14 lakh rupees. If they have been transferred in the warehouse for say only 9 lakh rupees, then integrated tax would have been levied on say 11 lakh 10,000 rupees. So where the value for the levy of integrated tax in respect of warehouse goods, where whole of the goods have been sold, the value determined under 3.8, or the transaction value of such goods which is higher. And where any part of the goods is sold, the proportionate value determined under 3.8, or the transaction value of the goods which is higher. And here, if more than one transactions have taken place in the warehouse, the title have been transferred more than one, then the last transaction value is to be taken. And in case of unsold goods, the value will be determined as per section 3.8. The goods which have been remain unsold, we have to clear the goods. That is, the importer has to clear the goods. On that case, the value will be determined as per the provisions of section 3.8. So that is 3.7 and 3.9 are say very important ones. Now section 5 is levy of lower rate of duty under a trade agreement. Section 5 is levy of lower rate of duty under trade agreement. Say in case if government of India has entered into a trade agreement with any particular country or a territory, government of India has entered into a trade agreement with any particular country or territory, and goods are imported in accordance with the trade agreement. If the goods are imported in accordance with the trade agreement, then duty as per the trade agreement is to be levied. Duty as per the trade agreement is levied, and here the decision of the central government will be final, whether the trade agreement applies to say particular country or territory or not. Then section 6 is protective duty on recommendation of tariff commission. On recommendation of tariff commission, the central government levies protective duty. The central government levies protective duty for the purpose of protecting the interest of domestic industry established in India. The central government is levying protective duty for the purpose of protecting the interest of industry which has been established in India. And basically, the duration of the duty will be specified in the tariff schedule. It has been specified in column 5 of the tariff schedule as protective. The government can increase, decrease or reduce the duty. Duration will be as specified in the tariff schedule. Besides this, section 8 is increase or levy of export duty. Amendment can be made in second schedule so as to provide for new levy or say increase. It is new levy or increase. So here the central government has emergency power to increase or levy export duty by notification in the official gazette. Central government has say emergency power to increase or levy export duties by notification in the official gazette. Besides this, section 8A is increase in say import duties, that is export duty. Import duties only increase. Here new levy is there plus increase is there. Here only say increase is there. There will be amendment in the second schedule. Here amendment in first schedule will be there. Here amendment in first schedule is there to increase what? The import duty of customs. Through notification in the official gazette, the government has the power to increase what? The import duties of customs. Then section 8B, this is very important one. That is safeguard measures. Power of central government to apply say safeguard measures, that is section 8B. Power of the central government to say levy safeguard measures. Now here safeguard measures basically can be imposed by the central government. If the central government after conducting inquiry finds that the increased imports have caused or threaten to cause serious injury to the domestic industry. So basically, central government after conducting inquiry can impose safeguard measures if it is satisfied that any article is imported into India in increased quantities. Any article is imported into India in increased quantities, and such increased importation is causing or threatening to cause what? Serious injury to the domestic industry. Now, what modes of safeguard measures can be there? Number one is they can impose safeguard duty. They can impose safeguard duty. Number one is they can impose safeguard duty. Number two is they can apply tariff rate quota. They can make application of what? Tariff rate quota, or say other measures as the central government deems appropriate. Now here, the allocation of tariff quota, basically allocation of tariff quota to supplying industries having say substantial interest in the article in prescribed manner. So tariff rate quotas will be, allocated. And here, what will be kept in mind? The average level of imports in last 3 representative years. The average level of imports in last 3 representative years for which statistics are available, unless different level is deemed necessary to prevent or say remedy in serious injury. So that can be the basis of tariff rate quota. The tariff rate quota will be allocated as per the rules. Now they can also say levy what? Safeguard duty. And here, if exemption from safeguard measures, in case article is originating from developing country, if article is originating from developing country and share of the imports from such country, share of import from such country is less than what? 3% of total imports of that article into India. In that case, no safeguard duty will be applied. If the article is originating from one developing country, and in case if the article is originating from more than one developing country, if article is say originating from more than one developing country, then also safeguard measures will not be applied if each country is less than 3% share, and in aggregate it does not exceed 9%. That is aggregate of the imports from developing country, aggregate of imports from developing country, each with less than 3% import share, taken together does not exceed what? 9% of the total imports of that article into India. Beside this, here central government can also exempt, safeguard duty from certain quantity when imported from particular country. So fundamentally, safeguard duty will not be levied if the article is originating from a developing country, if the share of that article from such country is less than 3% of the total imports of that article into India. Then if article is originating from say more than one developing country, for those countries having less than 3% share, safeguard duty will not be levied if in aggregate the share of imports from such countries does not exceed what? 9% of the total imports of that article into India. Beside this, in case the goods are say imported by 100% export oriented unit, or say unit in a SEZ, until and unless otherwise provided in the notification, safeguard duty will not be levied. But if from EOU or say from FCZ unit, if from say EOU or say from SCZ unit, the same is cleared in domestic tariff area. Same is cleared in say domestic tariff area. Necessary safeguard duty will be levied. Then necessary safeguard duty will be levied. Then initially provisional assessment will be made. Initially provisional assessment will be made, and then the assessment will be finalized. So here the duration of provisional assessment will be 4 years, and then 200 days, and the same will be finalized. Duration of provisional assessment is 200 days, and then the same will be finalized. The final duty, unless revoked, will remain in force for a period of 4 years from the date of the first imposition, and here the said period can be extended, and the total period including extension, cannot exceed 10 years. So this is a safeguard measures. This is very, very important. You have to remember it. Now we will be starting with the countervailing duty on subsidized article, or anti-subsidy duty. So in case if any foreign country or a territory gives subsidy upon production or manufacture of the article and its exportation from that country, or on subsidy on transportation of such article into India, then the central government levies what? Countervailing duty. Countervailing duty is levied not exceeding the amount of subsidy. So fundamentally, if a foreign country gives any subsidy, say in US subsidy is given for manufacture, production and exportation of article into India, in that particular circumstance, countervailing duty is levied. Now here, countervailing duty shall not be levied unless it is determined that the subsidy relates to export performance, or subsidy relates to use of domestic goods or imported goods in the export article. Here raw material itself is subsidized, or subsidy has been given to limited number of persons which are engaged in manufacture, production or exportation of that article. So subsidy must either relate to export performance, the subsidy must relate to use of domestic goods over the imported goods in the export article, or the subsidy has been conferred on limited number of persons engaged in manufacture or production or export of that article. Now further they say that in case if circumvention of countervailing duty has taken place, evasion of countervailing duty has been taken place, either how the circumvention has taken place, either by altering the description, they have altered the description, the name or composition of the article on which such duty has been imposed. They have altered what? The description, name or composition of the article on which duty has been imposed, or the article has been imported in unassembled or disassembled form. Article has been imported in unassembled or disassembled form, or they have changed the country of origin or export. So circumvention is taking place in this manner, or in any other manner. They are evading the duty which has been imposed. Then the central government, they will extend the duty. They will extend the duty in the form in which the goods have been imported. So hereby they will what? Extend the duty in the form in which the goods have been imported, fundamentally not earlier than what? The date of initiation of the inquiry. Not earlier than the date of initiation of the inquiry. Now absorption provisions have been also, anti-absorption provisions have also been introduced. Anti-absorption provisions. Now basically what is happening here is, the subsidized article, subsidy was given to the tune of 20 rupees there, then 80 was the export price. Now the government levied 20 duty. Government has levied 20 duty. Now they have further increased the subsidy. When they have further increased the subsidy, they have given a subsidy to the tune of now, instead of 20, they have given a subsidy to the tune of 45 rupees. So 100 minus 45, now the article says imported into India at 55, we have already levied 20 duty. Now it is still, the price works out to be 75 only. Instead of 100, the price works out to be 75. So we will still further levy 20 25 duty, that is anti-absorption provisions. So absorption, when the absorption of countervailing duty takes place, absorption of countervailing duty is said to have taken place, it is said to have taken place in case decrease in the export price is there, decrease in the export price is there without any commensurate change in the resale price in India. The decrease in the export price without, say, any commensurate change in the resale price in India. So in this case, if absorption of countervailing duty has taken place, whereby what? The countervailing duty so imposed is rendered ineffective. So that whatever duty has been imposed, this 20 rupees duty has been imposed, now it still have remained ineffective. Then the central government may modify the duty to counter the effect of the absorption. Central government has the power to modify the duty to counter the effect of such absorption. Okay. Then comes our, say, then comes our, the, you know, the non-applicability of the countervailing duty. The countervailing duty will not be imposed. Countervailing duty, the same will not be imposed in case the imports have been made by 100% EOU or, say, unit in a SEZ. But when the 100% EOU or unit in a SEZ sell the goods in domestic tariff area, when it sells the goods in domestic tariff area, then in that particular circumstance, the CVD which was to be imposed initially will be imposed when the goods have been sold in, say, domestic tariff area. So further, what will happen? Otherwise, what would have happened? The subsidized article would be first imported by a EOU, and from EOU it is sent to domestic tariff area, which will be damaging the Indian industry. Therefore, they say that the duty which was not levied earlier will be levied now. Now here, the duration of levy, initially duty will be levied provisionally. Initially, duty will be levied provisionally, and then the finalization will be there. And on final duty, basically will remain in force for a period of, say, 5 years. They will remain in force for a period of 5 years until and unless they revoke it. And this period of 5 years can be further extended for a period of, say, 5 years. That duty can also be, say, temporarily revoked. Duty can be, say, temporarily revoked also. And the temporary revocation period, shall not exceed 1 year. Temporary revocation period shall not exceed 1 year. Temporary revocation period, it shall not exceed, say, 1 year. Besides this, they are reviewing the things, whether the duty must be extended or not. So here, in case the review does not come to a conclusion at the end of the 5th year, then the same can remain in force for a further period of 1 year. The same can remain in force for a further period of, say, 1 year. Beside this, the government has power to levy the duty retrospectively also. Government has power to levy the duty retrospectively also. So, retrospective levies, in case, say, massive imports have been imported in a relatively short period of time, then in that particular circumstance, there is a retrospective levy. Whatever imports have been made within a period of 90 days prior to the imposition of provisional duty, for that retrospective levy is there. So this was about what the countervailing duty. Similar provisions are there in case of, say, anti-dumping duty also. What the provisions state is, say, exporter practices dumping. Exporter practices dumping. Say the normal value, that is the price, in the domestic market in the country of exportation is say 100, normal value is 100, where the export price at which the goods are say sent into India, that is export price is say 80, export price is 80. Then they are dumping that. This is basically margin of dumping. This is margin of dumping. They are dumping the goods in Indian market so that the Indian industry gets damaged. Here, the central government levies anti-dumping duty not exceeding the margin of dumping. Now, how the anti-dumping duty is levied? In India, the anti-dumping duty is levied being lower of what? The margin of dumping or the injury margin. Lower of say margin of dumping or the injury margin. What is margin of dumping? Margin of dumping is the difference between the normal value and the export price. Margin of dumping, it is the difference between what? The normal value and the export price. And what is basically the injury margin? Injury margin is the fair selling price. That is what? The non-injurious price, fair selling price, that is non-injurious price due to domestic industry and the landed value of the import, the landed value of the dumped imports. So they basically that is what it is. Anti-dumping duty is levied margin of dumping. This is normal value is say 100 and export price is say 80. So difference is 20 here. Now at which price the goods are sold in India? Say the goods are sold in India, that is a non-injurious price, that is a fair selling price in India, they are sold at 95. And the landed value works out to be 85. So here the injury margin is 10 rupees. So in this case duty will be levied not exceeding 10. So here anti-dumping duty is basically the difference between the normal value and the export price. What is the normal value? The price at which the goods are sold in the domestic market in the country of exportation. In the domestic market in the country of exportation. And in case if that price is unreliable, and in case if that price is say unreliable, then in that particular circumstance, at which price the goods are sold to export appropriate third country on the basis of cost of production plus profit margin, this is determined. Export price is the price at which the goods are exported to India, and if that is unreliable, then when the goods are sold to say an independent buyer, resold to independent buyer, that will be forming the basis. Then we are having the injury margin. What is the injury margin? It is a fair selling price, that is a non-injurious price, and the landed value, difference between the same. Now what do you mean by landed value? At which price the goods land into India, basically after adding the the basic custom duty and the social welfare surcharge. It is taken as the assessable value plus applicable basic custom duty. This is landed value is what? It is assessable value plus the basic custom duty okay, here, plus social welfare surcharge. That is what the landed value. So it's basically landed value is the assessable value plus the basic custom duty except CVD, SAD and other special duties. Now here whatever margin of dumping is determined, the same will be determined on the basis of records which have been maintained by the exporter or producer. Margin of dumping will be determined on the basis of records which have been maintained by the exporter or producer. And anti-dumping, in case if the circumvention of anti-dumping duty has taken place, as we have seen in CVD, here also if circumvention of anti-dumping duty has taken place by altering the name, description, etc. of the articles, then in that case anti-dumping duty can be levied to the articles imported by altering the form, description, etc. Besides this, exemption has been provided in respect of the goods which have been imported by 100% EOU or say unit in a FCZ or SCZ. But in case if these goods are sold in domestic tariff area after the imposition, say after the importation by EOU, they are, or say SEZ, they are sold in domestic tariff area in that particular circumstance. Anti-dumping duty, which was to be levied earlier at the time of say importation, will now be levied when the goods are sold by such SEZ unit or say EOU unit to say domestic tariff area, because it will be definitely damaging the Indian industry. Then the duration of levy, it is say 5 years. The same can be extended further for a period of 5 years. If the review does not come to an conclusion, that it will remain in force for a period of say 1 year. And it can be also temporarily revoked for a period of say not exceeding 1 year. Then provisional duty is also levied. Retrospective levy is also there. And anti-absorption measures are also there. Same are similar. They are similar to what we have discussed in section 9. Retrospective levy, whenever provisional duty is levied, 90 days prior to the imposition of this duty. For retrospectively also, the duty is say levied. Then next is about the refund of anti-dumping duty in certain cases. Refund of anti-dumping duty in certain cases. So here, if an importer proves to the satisfaction of the central government, that he has paid anti-dumping duty in excess of the margin of dumping, then excess of the actual margin of dumping, then refund will be granted of the anti-dumping duty within say 90 days of the receipt of the application. Then section 9B states what? Section 9B states that to compensate the same situation, of dumping or export subsidization, both the duties cannot be levied together. To compensate the same situation of dumping or export subsidization, both the duties cannot be levied together. The same cannot be levied together to compensate the same situation of dumping or say export subsidization. Then we are having appeals, section 9C. It is dealing with the provisions relating to appeals. So basically, you can go and file an appeal against the order of the anti-dumping authority, that is anti-dumping duty, anti-subsidy duty or safeguard duty. We can go and file an appeal for anti-dumping duty, anti-subsidy duty and safeguard duty. Appeal is to be filed to the special bench of Customs Excise Service Tax Appellate Tribunal. Time limit for filing the appeal is say within 90 days from the date of the order. You have to go and file an appeal, and fees is rupees 15,000. In case say stay application is there, then 500 rupees the fees for the stay application, and say restoration or say rectification of mistake, 500 fees is there. Then SESTAT will pass orders thereon as it thinks just and proper. They can confirm, they can modify, they can annul the order appealed against. So this was all about what our Customs Tariff Act. One topic is relating to project imports. A heading has been made 9801, that is dealing with what? Project imports. Now certain eligible projects are there for which all the plants, all the machineries, apparatus, equipments, etc., separate classification and separate valuation will not be there. They will be imported under project import. So to avoid what? The classification disputes, valuation disputes, this tariff heading is there. This particular tariff heading is there, and spares, etc., can also be imported under the project imports. Spares, etc., they can also be say imported under project imports. And basically, the eligible plants are industrial plants, irrigation plants, power projects, mining projects, oil and other mineral exploration projects. And here there is no minimum investment criteria. Basically, to avoid disputes relating to classification and valuation, this project import is there, and the eligible projects are say notified. So fundamentally, this was all about the tariff which we have discussed. Remember 37, 39, they are very, very important ones. Besides this, anti-dumping duty, say subsidy duty, important is there. Okay, this is all about what? Tariff.